In the future, I'm expecting there's going to be a big shift in asset prices with different types of properties. And this is the biggest driver for the first home guarantee that the government just rolled out in October 2025. I'm your host, Tony Shah, and thanks for joining me on another episode of The Mortgage Chat. So why do I feel there's going to be a massive shift in different types of assets, in different types of properties in the market in the coming future? Look, it could be the next 18 months, 36 months, 4 years, I don't know, but I guarantee you there's going to be a massive shift in house prices because I'm already seeing it. And the biggest driver, or the first major driver, was a first home guarantee. And I'll tell you why. And let's just use New South Wales as an example for now, okay? Because I'm from New South Wales, it's easy for me to talk about New South Wales, but the logistics of what I'm talking about can be applied to different states. Under this new first home guarantee scheme that was introduced in October 2025, if you're in New South Wales and you're a first home buyer, you can purchase a property with up to $1.5 million with only a 5% deposit, as long as you can cover the stamp duty as well. And that's on the basis that you're buying in capital in regional cities, but your cap decreases down to 800,000 for any other areas within New South Wales. Obviously, we're going to talk about the $1.5 million cap first, okay? So let's just use the $1.5 million cap as an example throughout this whole YouTube video. So why am I expecting a massive shift in house prices? Well, like I said to you, I'm already seeing this for first home buyers within Sydney. So anything that's under the $1.5 million cap right now is probably getting the biggest drive and the biggest capital growth, right? Because all these first home buyers want to get into the market a little bit faster, a little bit earlier, FOMOing, want to get into the market before it becomes too expensive and too competitive. And we are seeing this in New South Wales, call it the Western Sydney area, Blacktown area, Newcastle area, Central Coast area even, okay? And we're seeing prices around these areas driving up a lot more faster than other certain areas in Sydney itself. And guess what? I see a lot of valuations around New South Wales. So very certain, the biggest percentage growth right now are any properties that's below the $1.5 million cap. So like I just mentioned, anything below the $1.5 million cap is going to get the biggest increase in prices percentage-wise, okay? Followed by the $1.5 to $2.5 million mark. So why am I saying this? Well, this new first home guarantee cap actually drove up the prices quite a fair bit. So anyone that was, living on your $1 million, $1.1, $1.2, $1.3, $1.4 million property, organically, the house prices drove up overnight right after the announcement of the new price cap, okay? So for example, my brother had a property in Winston Hills, right? Any given day, it was probably worth around your $1.36 to $1.42 million mark, okay? But after the first home guarantee scheme that got rolled out, organically, that was pushed up to $1.5 million because a few months down the track, a property that was very similar to theirs with a smaller block was actually sold for $1.49 million. So I already know the biggest driver behind this is the first home guarantee scheme that was introduced by the government, okay? So what you're going to see is a lot of the first-time buyers are going to fight for that, $1 million to $1.5 million property in Sydney because right now there's actually just not much properties within that range anyway. So sooner or later, they're going to go closer and closer and closer to the $1.5 million cap. And guess what? Anyone that is selling to first-time buyers that's under that cap and just below that $1.5 million purchase price, guess what they're going to do? I can guarantee you, first of all, they're going to be the upgraders, okay? They're going to upgrade, they've got a bigger family, they want to buy a bigger house because of the bigger family, or they want to move into a nicer area, okay? And of course, all those above will cost you more money. Therefore, they're going to start hitting that next price bracket between your $1.5 to $2.5 million, right? That's just an example, okay? And obviously, that depends on borrowing power. That depends on how much debt they want to take on, right? So that, and I believe if you sold your property for $1.5 million to a first-time buyer, your next level to upgrade on a new home will be around the $2 million mark. You're absorbing just enough debt, but not too much debt to hamper your lifestyle. And to be honest with you, if you have a property in Sydney worth $1.5 million and you sold it for $1.5 million, your next step is actually buying something for around $2 million, okay? Because there is actually not much or even not worth it to be buying something in between those price ranges, Okay? And that's why I truly believe anything that's under the $1.5 million cap will increase significantly first, followed by your 1.5, 2 mil to $2.5 million mark. Okay, so I just talked about one group, which is the upgraders, okay? But let's talk about the next group that's selling property under the $1.5 million mark. And that is your downsizers, okay? So these downsizers could be, an older couple that's ready to move to a smaller place because the kids has moved out, okay? They want to sell, pocket some money, buy something debt-free, and live off the profits. Or the house is too big for them and they don't want to maintain such a big house, okay? So if you're a downsizer, what are you going to buy next, right? Obviously, most likely, it's going to be a townhouse, or it's going to be a villa, or it's going to be something, call it the Central Coast. That's going to be a little bit more cheaper, right? You're going to sell something for 1.5 mil in Sydney, but you're going to move up the Central Coast. Hopefully you can buy something for $800 to $1 million, downsize, buy it with cash, and I can live off the remaining profits. Pretty good life. So what you're probably going to see is your downsizers are probably going to pay a little bit above market just to get the property they want because they're cashed up in comparison to your first-time buyers, okay? So, sooner or later, houses for first-time buyers will be out of reach. It will be out of reach, okay? And it could be affordability and it could be deposit, okay? They can't afford a house. It's gone up too high, too fast. The income doesn't support such a big debt. And guess what? Your next best option is to buy something a bit more cheaper. You're not in Sydney, Central Coast, or or South Coast, example, or buying a townhouse or villa. Okay, so now what you got is you got your first-time buyers that's going to be priced out of Sydney and houses, which has to go for townhouses and villas or different areas outside of Sydney, which is going to be the same logic of when downsizers selling their home. So now you have two people or two groups of people that's fighting for the same type of assets, right? Townhouses, villas, and property away from Sydney, that's going to be a lot more cheaper. And guess what? Because now you got two groups fighting for the same type of asset, which is a lot more cheaper than a house, that cheaper asset will increase in value a lot more faster as well. Because now you got two groups of buyers fighting for the same asset. And guess what? I hate to say it again, those assets, sooner or later, because there's so much competition, will hit the million or above mark. Okay? So guess what? Now you're going to have first home buyers now going to be priced out of houses and townhouses in Sydney, and also houses in the Central Coast, South Coast area. I'm just using Central Coast and South Coast as an example, okay? So don't shoot me, okay? But you get the logic, okay? They're going to be priced out sooner or later, all right? So therefore, just guess what's going to happen? They have to go for your last resort, which is an apartment, which in most cases, it actually doesn't grow in value, okay? Unless it's in areas like, your high demand areas, right? So for example, you've also for a few suburbs on top of my head, you're looking at around Newtown, Stanmore. That's still affordable and not many apartments being built around the area. So you're probably going to have a lot of people fighting for those areas or alike, which would drive up the prices on apartments, okay? But if you're buying an apartment in the Western Sydney area, or even the Northwest area, or even call it Macquarie Park, Rhodes, right? And actually, there's going to be more apartments being built around the area. You're not actually going to see more growth in those assets, right? Because there's so many supply on the market. And guess what? There's actually going to be more properties or more apartments and units are going to be built around the area because there's so much supply, which is somewhat meeting demand. And guess what? You're at an equilibrium and there's actually not going to be a lot of drive in house prices. Okay, so unfortunately, I do feel that's how that's going to be played out in the near future. Like I said to you, it could be in the next 18, 24, 36, 48, even 6 years. I just don't know. But I can guarantee you, once your $1.5 million properties for first home buyers are going to get absorbed, even not for first home buyers, but from upgraders, then your 2 to 2.5, then your downsizers that's buying your, townhouse, villas, and nicer apartments, somehow a lot of your future buyers will be stuck with apartments. Unless, of course, Bank of Mum and Dad is going to hand them a big chunk of cash. That's a different story. Okay, so that's just my take. I truly believe in it because I am seeing it right now. But guess what? Some people actually don't mind buying an apartment and living in this closer to the city because they're buying it for lifestyle reasons, not for capital growth reasons. Okay, for example, we've given our clients two examples where, you can buy a house in the Western Sydney area, which most likely is going to grow in value. Or you can go buy a 2-bedroom apartment in Petersham, in St. Peters, where, it's more for lifestyle, it's more closer to work, you're in the city, you're young, it's more trendy, but it doesn't grow in value that much, right? So now you have to think about, okay, am I buying it for my future capital growth, which probably I hate where I'm going to live there, or I'm going to stick with lifestyle. I don't care about capital growth. I'm happy to buy this for lifestyle reasons, and I'm happy. Okay, so there's two ways to think about it. It's never a bad thing or a right thing to say, hey, you have to buy a house property that has capital growth, right? And if you end up buying something that you hate, but you're buying it just to live there for capital growth, well, guess what? That's not a good lifestyle, is it? Okay, so that's just my take. I hope you enjoyed this video. Thanks for joining me on this episode, and please stay in tune as always, because we're going to have a lot of YouTube videos and a lot of educational videos that you can look up here for you to understand and get a better understanding and better foundation of how property works. Okay, so as always, please stay in tune, and I hope to see you next time on another episode of the Mortgage Chat.